We have a very interesting question here from a new subscriber as part of our January 30-day challenge, who asks why we sometimes like to talk about contrarian trades or so-called pain trades, and whether it's not better to just stick to the trend and follow the money. So this is such a fantastic question, and I think it allows us to make a few important distinctions when it comes to contrarian trade ideas. Firstly, it's important to know that you know you should never be married. You should never be married to any type of trade, whether that is a consensus trade or a contrarian trade. Some of our trade ideas might sometimes be contrarian, but it's only a fraction of those trades. And secondly, when talking about contrarian trading, people often jump to the conclusion that it means, just randomly jumping in against a trending move or against the overall market sentiment. But that's really not the case. When we consider contrarian trade ideas, it always comes from a fundamental and sentiment-based reason. And the reason is never based on, the market that has gone up too much or gone down too much. That's the quickest way to lose money in markets. The popular trading axiom that the market can remain irrational for longer than you can remain solvent is so very important when it comes to this. There are, of course, many retail traders and investors that would sell something because they think it can't go any lower or they think it can't go any higher, but just looking at the chart. But that is a sure way, in my opinion, to just lose money in the markets. And that's not the way that we approach possible contrarian trade ideas. So whenever we look at a potential contrarian trade, it will always be based on additional research or analysis, fundamental analysis, sentiment-based analysis. It won't just be based on price or price levels, for example. The one area where trading or traders or investors often get stuck on contrarian trades is that they forget the power of the trend and the power of consensus. Just because something has gone down a lot and gone up a lot, that overall momentum for consensus trades means that it can often go much lower and much higher than we think it can, right? There's a reason why traders say the trend is your friend. And the majority of times, traders lose money by taking contrarian trades. And that's because they base their trades on the assumption that markets operate rationally and logically, which we know, of course, is not the case. Now, the reason why traders usually like the allure of contrarian trade ideas is because they see the potential risk to reward, the potential big payoff usually associated with those types of trades. And they like the idea of buying the bottom or selling the top, and probably to some extent, it might come down to an ego thing, being able to say that they outsmarted the market or whatever. So looking at contrarian trades through these types of pitfalls, it's a sure way to lose money because the market can go much higher or lower than we think. But there is a better way to approach contrarian trades or trade ideas, in my opinion. Firstly, always with a lot of caution, knowing that you need to be more accurate with your timing, unless you like sitting on constant drawdowns, which I think nobody likes. An important premise of having a contrarian idea is that you are trying to benefit from massive complacency in the market. You're trying to profit from extreme exuberance or extreme fear. And the danger, with trying to do that is you're betting against a well-established trend. It's like trying to catch a falling knife. So caution is always required when even thinking about a contrarian trade. Now, the times when contrarian trades work the best is when the market has reached such an overly bullish sentiment on an asset that they no longer think it can go up or down, go down at least. And when the market has reached such an overly bearish sentiment on an asset that they no longer think it can go up anymore. Good examples of this, was actually the stock market crash that we had due to the COVID-19 crash. If we go back to something like the S&P, if we go to a daily chart, one of the biggest contrarian trades going back all the way to March and April was actually getting back massively overweight US equities right after the crash. The contrarian traders that took those trades, that bought that dip, they are laughing all the way to the bank right now. Yours truly didn't even think about buying the dip. I only got more bullish again on stocks all the way back in June and July, which was over a year. So, there's there's reasons why the allure is there. There's good examples of when it has worked very well. Another good example that I'll always refer back to when it comes to that is looking at the euro dollar, going back all the way to April 2018. Now, if I just quickly zoom out on the chart here, this was a time where I traded actively, and it was such an interesting thing to watch. Was this overall cluster that we have on the euro dollar back in April 2018, even January, February, March, April, the markets were so convinced that the euro dollar was going to push higher. The markets were so convinced that the ECB will hike rates. But what actually happened, of course, was the exact opposite. And the euro dollar started a 2-year massive downtrend from April 2018. And what was very interesting for me during that time period, during April and during May, was how many market participants, even massive investment banks, how many of them were caught off guard, completely off guard by that move, that consensus expectation that the euro dollar was going to continue pushing higher. Now, the challenge with looking at these types of trades is really twofold. Firstly, even if you catch the initial turn of that move, let's say that you were one of those traders that thought that, okay, the euro dollar is moving lower. The odds of you catching that trade and riding it all the way down for its full potential is very, very, very low. You're likely not going to have the fortitude, the patience to ride that trend for everything that it's worth. So, when you look at these types of trades, you often think, man, risk reward on this thing is massive. But at that time, remember, you haven't seen this yet. Okay, you might think that it can reach this level or think that it can reach down all the way to 105, but you never really know. So from a risk reward point of view, even though risk reward looks very juicy, you're probably not going to ride it out for the full reward that it's worth. Secondly, if you jump in at the wrong time, right? So let's say that you were one of those traders that thought that the euro dollar is going lower. Imagine that you were one of those guys selling at 122 or selling at 123 or selling at 124. It would have been a very, very, very hard pill for you to swallow. And potentially, by the time that it eventually does correct, you could have lost so much money on trying to catch that move that it's just not worth it anymore. So the way that I prefer to look at something like contrarian trade ideas is understanding in detail both sides of the argument, right? So if you are looking to sell something where the majority of market participants or the consensus thinks that it can only go higher, make sure that you understand the reasons why the consensus thinks that way, right? If it's a solid argument and you want to be selling it, you better make damn sure that the reason you're selling it is enough for the market to fix it on that and actually push in that direction, right? And make sure that you weigh the reasons for both of it. Similarly, if you want to buy something where everybody is think that it's going lower, make sure that you fully understand the reasons for why the markets think it's going lower in the first place. And then evaluate whether the reasons for wanting to sell or buy against the crowd is really justified and whether it makes sense from, both a sentiment as well as a macro fundamental point of view. Otherwise, you're just wasting your time, and it's better just to stick to what stick to, so-called consensus trades or trends. And take it from there. Probably the most important thing also to keep in mind about contrarian trade ideas is that you need to really understand risk management and trading psychology before you even think about taking any type of contrarian trade ideas. If you don't have the mental discipline, the mental fortitude to put solid risk management in place, don't even think about trading something like a contrarian trade. And if you don't have that mental fortitude to accept when you are wrong, accept that, okay, I tried this trade and for this various reasons, it didn't work out, step away. If you can't do that, if you're going to get married to those positions, then it's going to be a sure way for you to probably blow up your trading account. It's going to be a very dangerous avenue to explore. So I hope that helps with the question. Any others, please don't hesitate to let us know.